Hi, it's Tony here. Welcome again. Hope you're enjoying these lessons and I hope you're picking up a lot of good information in regard to property and property investing. So listen, in today's post, we're going to look at 5 growth suburbs for property investing in Melbourne. Now, one of the first things I want you to understand here is that Melbourne as a whole, if you put a blanket over the whole of Melbourne, we have a macro market, which is the whole of Melbourne. And then you've got what's called micro markets. So there could be suburbs inside of suburbs, there could be streets inside of suburbs, there could be little areas and locations inside of suburbs. So there's not just one big blanket overview of Melbourne. So let's go through and have a look at some of the different things that we'll come across in regard to Melbourne properties. So obviously you're going to have house, okay? So we've got house and land, you've got dual occ, you've got townhouses, you've got boutique apartments, you've got units and flats. We've got high-rise apartments and commercial developments. We've got office space, commercial retail, and shopping centres. So the whole of Melbourne, the demographic of Melbourne itself, there are a lot of different properties and a lot of different micros underneath the whole macro blanket of Melbourne. So hopefully you're going to get that and understand that. So let's start from the Melbourne CBD. Traditionally in the centre, right, that's your main central business district. So what you'll find in here is that you've got to have major high-rise office blocks, a lot of high-rise apartments now, and a lot of commercial and retail properties in and around that location, okay? So here's a chart I want you to see from Melbourne. Now, this is how many million-dollar suburbs. Now, this is, I think it was around about a year ago, I picked this up. There was 120 suburbs that recorded $1 million median house price in Melbourne. So inside the CBD, within about a 10-kilometre radius of Melbourne CBD, 52 different suburbs. Then if you go out into the blue circle out here, okay, we're talking 10 to 20 Ks from the CBD. Again, we're talking 53 inner middle rig suburbs that have now got $1 million median house prices. And then if we go to the yellow here, which is around about 20 Ks out, 20 to 30 Ks out from the CBD, we've now got 15 outer ring suburbs. Now, the interesting thing about this little graph here is that from the centre of the CBD, you'll notice that the majority of the outer ring is gone over here to what's called Melbourne South and Southeastern suburbs, okay? So as you will know or understand, they're very affluent areas and they're very highly priced. So the potential for an investor is looking over here towards the north and the west of Melbourne, where we don't have the same sort of price punch. So what happens here is that investors or property purchasers start looking in areas and locations like this, go, hang on a minute, the price point over here is $1 million plus. Oh, I can walk over here and I'm in the west or I'm in the north of Melbourne and I can pick up something for 500 or 600,000. This is the way investors look, and then all of a sudden the markets on that side of town start to move and start to go up in price. So let's have a look at it again. Now, this red circle, red line that's going around the outskirts of over here, what this does is this shows us the radius that we're looking at in regard to a $600,000 price point affordability line. So outside of those areas now, you'll start finding properties under 600,000. Now, if you look at Melbourne CBD, you look at the south and the east over here, the southeast and the whole region over here, you're talking a pretty high price point because here's the $600,000 line right out here. So to buy something under 600,000 out this side of town, you're going to have to go a fair way out. Yet, if you start looking around over here in the west of Melbourne, if you start having a look around here in the north of Melbourne, you'll start to see now that from 20 to 30 Ks out, this is where there is potential for a whole lot of growth, okay? So I think I spoke on one of the earlier videos, on one of the earlier posts here about the importance of infrastructure and demographic dynamics. The west and the north of Melbourne is where there's a lot of action being spent in regard to infrastructure, government spending, and private investment. So when you see these sort of graphs, you've really got to start to look and go, well, okay, where are the potential areas out here in these locations that I could start looking? And I already know for a fact that, you know, even when markets were going down in Melbourne, you know, late 2018, 2019, that some of these areas through the west and through the north were still experiencing some pretty significant growth. So this is the way we look at those sort of demographic data and charts. Now, again, this is the Melbourne Council regions, and again, right over here, the southeast, Casey's been a really good area. Cardinia's been a really good high growth area. You're back in around the inner suburban areas over here. Hume's been a good area, Melton's been a very good area, and Wyndham's been one of the fastest growing councils in the whole of Australia. Melton is also on par with that, and so is Hume. So The areas that you could start to look at and maybe really start to do some research is down here. And another area that's done really well again in the last few years is the Greater Geelong area. Okay, so there's a whole range of suburbs in and around those councils that have got really, really good potential for long-term capital growth. So here are the key property market drivers that we look for. Population growth in good growth corridors. Okay, so I've just pointed out the north and the west is probably the two most projected areas in Melbourne. Government spending, so hospitals, schools, railway stations, infrastructure. We spoke about a lot of that earlier in one of the infrastructure videos that we did. Private sector spending, shopping centres and developments. Now, when you go into a new area or a new estate, and once a shopping centre starts to get built, I'll shoot another video because I can show you some really, really important demographic data about how prices increase once construction of a shopping centre starts in a major residential development estate. Infrastructure, roads, rails, tunnels, buildings, schools, hospitals, all that sort of thing. And new industry, so new enterprise, new industry evolving. Geelong was a good example. You know, health and bioscience is a big industry that's starting to develop down there. They brought in the TAC Transport Accident. They took work cover down there. So the government planted a lot of their head offices down there, and therefore a lot of population growth, a lot of people moving to the area, therefore a lot more supply and demand. So folks, that's a lesson 101 on 5 potential growth areas for the whole of Melbourne that's going on as we speak. Really, due diligence and doing your homework is paramount. You need to know inside those areas, inside those suburbs, what are the better estates, who's got the best stock, what's a block of land worth, but not only that, you know, what are you paying for your build, what are you paying for, you know, your whole house and land package, if that's the type of thing you're doing in those areas. Really, really important that you really delve really deep into this space. All right, hope you've enjoyed that post. It's pretty good information for you. But again, if you need some help and you want us to show you how to do this and how to research this and how to make the right decisions when it's come to investing, feel free to click the button, learn more, book a strategy call with us if you haven't had one, and hopefully we can help you out. All right, I'm Tony, and I'll catch you again on the next post. Have a great day.